Let's talk to Shaun Richards from Not a Yes Man Economics. Very good morning to you, young Shaun.
Morning.
Right, let's talk about inflation. Okay, this is the scary side of the market for 2018 and the outlook. If inflation rises, basically interest rates go up quicker and we may have a stock market crash. Why is inflation so important? And it dipped in the recent numbers from 3.1 to 3%. Explain inflation to the viewers.
Well, this is a concept that's sort of easy in theory, a lot harder in practice.
Okay.
What I mean by that is you have the idea of a permanent rise in prices. That's the theory if you get an economics textbook out. That gets harder when you go out into the real world and try and measure it and you break that down, because obviously different people buy different things, different amounts of it, the prices move at different rates, and then it gets quite complicated. The statisticians officially try to measure an average basket and bring that forwards. Again, there are problems with that. The biggest problem, so I spend a lot of time on in the UK, is the housing market, how you price that. Currently, I think we're doing it completely wrongly, because the new system, believe this or believe this not, those of you viewing this who actually own their own place, it assumes you get rent, which you don't, and then uses the rent number you don't actually ever get as a way of calculating the inflation.
Okay.
So that brings a number you didn't say. You mentioned 3.1 down to 3%. Doing it that way brings it down to 2.7% right now. But I think that's a mistake. A lot of criticism, if you read the FT, you'll have seen it, the economics editor hates the retail price index with a passion.
Yep.
However, one of its strengths is it does have an element of house prices in it, does it via depreciation, but it is there. It also has interest rates, which people might think are more reasonable. You can measure them. You can go out and measure house prices. You can go out and get mortgage rates. They exist. When it does that, it gets you an answer of a bit over 4%, 4.1%. And here's another spin on it. That's gone up, not down.
That's tricky, because I saw that inflation, the official line, it came down a smidge because airline tickets were a smidge cheaper.
No, that again slightly gets complicated, yes, but actually their weighting of airline tickets changed. So
it was the weighting as opposed to the actual pricing?
Yeah, the
Okay.
actual thing was pretty much the same as last year.
So that was really the false news as a headline, right?
Yeah,
Okay.
and this is where some of these issues gets complicated. If you go back to where I started trying to measure the price things, one of the arguments I make a lot is that because the housing market's so big in the UK, we've got to put house prices in. It's a big deal. People, obviously not everyone, reasonable percentage rent, but quite a lot of people buy. Therefore, it needs to be in there.
Okay, let's have another twist on this. Inflation in 2018. Okay, I think the Bank of England are expected to rate hikes 1 in 2018. I guess they would have more if inflation picks up. Where does inflation go for 2018?
Well, we've seen as the year's opened, we've got some commodity price inflation. Varies generally across the board, prices are higher. The other day, oil touched $70. So there is a sort of symptom of a bit of pressure. You can argue whichever way that is, whether you think that's speculation or whether it's because the world economy is doing well and some of the commodities being used up. Beyond that, though, I'm finding it hard to see how that's going to fire into the system. In the past, it used to be via wages, whereas at the minute, wage growth isn't really picking up. So the idea of the sort of pilot light, firing the burner of the boiler, I don't really see yet. So I'm not sure I quite get that argument. Yeah, we might get a bit more inflation. For example, price of petrol or something like that would be higher. But beyond that, so far, not a lot. And I think that the Bank of England, I think rather than sort of following inflation, if anything it moves this year, will be following the Fed. The Fed saying it's going to raise. That'll be increasingly difficult, I think, if we don't follow that.
Right.
Now, there's some argument that they're following inflation, but then you see, again, that gets real quick. You raise interest rates to deal with inflation, takes about 18 months to work. So therefore, if there's an issue this year, you needed to be doing it last
18
year.
months ago,
Yeah.
from that point. Okay,
Yeah.
So there is a lag on that. But where do you think the underlying number will be at the end of the year?
The UK?
Yep.
Because if the pound stays here, I think it'll drift lower, probably back towards 2%.
Right.
Their caveat on that is if the commodity price thing stays up and sort of kicks something off, or of course, something we haven't seen in the credit crunch era, wage growth actually finally picks up.
That would be nice, but don't tell
Wouldn't
my
it?
staff. Shaun, as always, thank you very much indeed for your time.